What's up, my crypto legends? In this episode, we are taking a look at the Bitcoin logarithmic chart on the monthly, and I'm going to show you, I'm going to prove you that yes, we are in a bear market. This is it, the bear market for Bitcoin, but this might be the shortest bear market you have ever seen for Bitcoin, potentially lasting a couple of months or just several weeks. The Bitcoin cycles are extending, and it's very, very likely that we are going to peak somewhere around 2022. Okay, I'm going to show you also with the DXY in 2008 we had a huge amount of money printing activities and the dollar index had a massive crash. Now in 2020 and 2021 the same thing is happening, so we can expect a massive drop on the DXY, meaning that the Bitcoin cycle will continue, because when the Bitcoin price goes up, that means that the dollar index is losing value. And also, if you're interested in trading, make sure to check out the Bybit trading platform. The link in the description. You can get up to $1,610 in bonus. This is my favorite swing trading platform. My favorite day trading platform is PrimeXbt. If you use my link in the description, and Bitcoinsensus 50 as the promotion code, you can get 50% in addition of what you deposit. Also, my tutorials are in the description in the tutorial section. Okay, guys, and a massive thank you for my last live stream. Over 300 likes, guys. Make sure to smash up the like button. You'll be helping the channel immensely, and subscribe. I'll be doing another live stream afterwards, so make sure to hit the notification bell. And said this, let's go straight into the video. Hello there, Andy here, and welcome back to another episode of Bitcoinsensus, where you subscribe for the quickest technical analysis on Bitcoin, cryptocurrency, and the financial markets. Not financial advisor. Don't buy or sell anything that I say. If you do so, do your own research. Said this, let's go straight to the chart. In this episode, what I want to show you is that the bull cycles are extending. They are not getting shorter, they are extending, and there is no chance that we have peaked here now in April just below $65,000, and I'm going to show you in this episode. We'll be taking a look at this chart because here we can see the three cycles that we've had. The first one being in July 2010 to 2011, the second cycle here in the yellow, and then the third cycle here in the purple, which peaked in 2017, as you know. And in the orange, we have the cycle that we are in right now, the fourth cycle. We can see that the timings are extending, okay? Each cycle starts from its respective bottoms, and I'm going to show you with the other chart, okay? The red cycle here was the first one, very, very fast cycle. The yellow, a little bit more time. And in the purple, we can see the 2017 cycle started in 2015, okay? Which was a very, very long cycle. Now, there's no way that we have peaked at $65,000 here in April. The cycles are extending. This is just a breather. There is more mass adoption coming slowly and consistently. So this is not the top of the cycle, in my opinion. We should be peaking out somewhere in 2022. I'm going to show you with this chart, okay, from its respective bottom of each cycle. So the bottom here was in November of 2010 in the first cycle, and in the yellow, this vertical yellow line was the peak of the 2011 cycle, okay? Now, the next cycle started from the bottom here, which is in November of 2011. So the bottom is right over here, and the peak was here in November of 2013 here, where we see this vertical yellow line. The next cycle started in January of 2015, right over here where the bottom was, and it peaked in 2017 where the top is, as you can see here with this vertical yellow line. Now, where was the bottom? In 2019, January of 2019, we bottomed out, okay, just below the $4,000 area. So we can see that the first cycle was really, really fast until it peaked out. Now, the second cycle, we can see from the bottom, it was a little bit more extended before reaching to the peak here in 2013. Now, the third cycle was much more extended, as you can see from the bottom, all the way to the peak of 2017. Now, what would make more sense, this peaking right over here, or this peaking round about 2022, meaning that we are extending here because there is no way of mass adoption coming worldwide. There is more than 100 million users now. 2 years ago, there was less than 100 million users using Bitcoin and cryptocurrency. Now we are growing much faster and consistently. This has just been a breather from a massive hype in the middle of the bull cycle. So this would make more sense. Now let me just show you here with this blue horizontal line, this blue vertical line, sorry. As you can see, this is the halving, the first halving in November of 2012. We can see the distance. This is the monthly chart, remember. The distance from the first halving all the way to the peak in 2013 November. We can count the bars. In this case, it's monthly. It was 12 bars, just about a year to get from the first halving to the peak. So that's 12 months. And from the next halving, which was in July of 2016, till the peak of 2017, we can see it was 17 bars. So it was already 5 months more than the first halving. It wouldn't make sense of the next halving, which was in May of 2020, to peak right over here, 11 bars, 12 months. So it is less than the first cycle. Most likely scenario, we would be peaking if the second one was 17 bars, which is 17 months. This third one would be 20, 25 bars, let's just say 22 bars, adding a few more months to this cycle, okay? So from this halving all the way to the peak, let's count 22 bars, for example. This should take us around about March of 2022. This would make the most sense by looking at this chart. Okay, and this is the next fundamental that is showing me that the bull cycle is getting extended and it's not the end. This is the money printing, the M1 money stock from 2004 all the way till late 2009. And from 2004 all the way to 2008, there wasn't too much money printing activity. In 2008, we know that this was the credit crunch, that was the financial crisis, okay, and suddenly we started printing a huge amount of money, as you can see. And in this chart, the DXY, the dollar index from 2009, okay, when the money printing started in 2008, we can see in 2009, this devaluated the dollar immensely. So now we can see that money printing activity, it has nothing to do with the 2008 printing, because we didn't even print about $500 billion in 1 year from 2008 to 2009, and from 2020 all the way to mid 2021 right now, we have printed over $14 trillion. Okay, so this is going to have a huge impact on the dollar index, on the dollar value. If I zoom in here, the money printing started round about COVID, as you can see, in 2020, already devaluating the dollar a lot. And I see another wave down, devaluating the dollar, coming all the way here to the 2008, 2009 levels, okay? As you can see, I did do some technical analysis here. We are hitting some major support levels, okay? Which is just at the 90, 89 levels here. And we can see that's major support. If we break this support area, we are going to see a massive drop to these next support levels. And this is what I'm expecting for the dollar index in the next coming months, potentially entering into 2022 also. So guys, this is what I've got for today's episode. The bull cycle is getting extended. We are not peaking in 2021, in my opinion. Most likely it's going to be in 2022. Thank you very much, guys. If you haven't checked out the Bitcoinsensus website, we have great news, great tutorials on how to buy, how to store Bitcoin, and also price predictions. We got the latest articles, okay? So make sure to check it out. The link is in the description. If you haven't seen my Bybit or my PrimeXbt tutorial, there's a video popping up on your screen. A massive thank you for tuning in, and I'll see you guys in the next one.